Okay, good afternoon to everyone. So let me first maybe introduce myself. I'm Daniel Schreiber. I'm heading the investment team at Symbiotics. And well, today's agenda of the session today will speak about the green, social, and sustainability bonds and illustrate a bit the value chain of a typical bond that we have issued this year. And we have the pleasure of having with us Rosemarijn van der Meij, who is fund manager for the green fund at ASN Impact Investors. Very happy to have Rosemarijn among us. So she bought with one of her fund, the transaction that we issued, that we arranged actually for Sun King or Green Light Planet. You will hear both names today. Krishna can explain maybe the reason why both names are here, but formally, legally, it's Green Light Planet, but the brand is Sun King. So Krishna Swarup is here, came expressly from India to speak about, to present Green Light Planet and to explain also the benefit he has from working through a green bond. On my end, quick overview. I'll do a quick overview of the green bond market and illustrate also a bit what we have been doing in the current issuances that we have. We started in the green bonds, issuing green bonds now 3 years ago, and it has been growing quite well, and we'll look quickly on this. And as mentioned, Krishna and Rosemarijn will present their part of the investment chain. A quick overview on the sustainable bond. What are sustainable bonds? So first, here today we'll speak really about the green, social, and sustainability bonds, which are the three main categories. We also have the sustainability-linked bonds and climate transition bonds, but which are a bit more on the side, I would say, and are less of interest to us today. I think what is very important to understand with sustainable bond is that it is a voluntary scheme. There's no regulation today, a proper regulation for these issuances. We have a set of principles that were set up by the International Capital Market Association, which clearly state that some principles that you have to follow to be able actually to label your bond green, social, or sustainability bonds. The difference between the three being that the green obviously is having a positive impact where your investment, the use of proceeds of the bond will have a positive impact on the environment. The social one, of course, is to have a positive impact in terms of social benefit of the population that you are targeting. And the sustainability is a mix between the two without having a clear set of what percentage is going for social or green. It can really be flexible depending on the situation. And I think for Symbiotics, it's clearly the social one, and we'll see, is somehow a market that we have been targeting since inception of the company in 2005. Although we never labeled it as being social bonds, we have always worked in having a positive impact, a social positive impact on the population that we were targeting. Green is something that we have been added more recently, and we'll go into it later on. Sorry, if we look at the full market today, what is interesting is to see first that, well, it's something very recent. There is a very strong growth over the last few years, especially in the last 3 years actually. And not only on the green, it started mostly all green. When you see on the left on the left chart, most of it was green, some sustainability, and actually the social bond part has been increasing more recently, mostly because of the COVID, and it's mostly public sector issuances that were done for the social part because of the COVID. So some bonds that were really supporting some different population, including in the health system during the COVID pandemic. We see that the figure as of June 22 seems to be slightly lower if you compare. I think the first quarter was very, very strong in terms of GSS bond issuances. The level now of issuances in the second quarter, and what we see also in the third quarter, is clearly going down, mostly because of turmoil on the market, and especially on the bond market. One figure that is very interesting also is to see that the volume, as mentioned, is growing very fast. Now there is a very diverse share of the different categories of countries that are potentially issuing these bonds, with the developed market being by very far the largest issuer. And then you have the emerging markets, which have a very growing portion as well at the bottom, but remain a very, very small part, and especially if you take into account that within this emerging market part, over 60% is actually issued in China. So it means that for all the other countries, emerging market countries where we are working, the proportion of green social sustainability bonds that have been issued is extremely minimum, and there's a huge potential there to increase the number of issuances in these markets. Interestingly also, and you will understand why it's especially interesting for Symbiotics, when you look at the deal size of these bonds, the vast majority of the bonds are actually very large, more than 1 billion, bond issuances, so very large issuances, mostly through public sector issuer. So I think that's a very important point also to keep in mind, that the majority of label bonds today are being issued by the public sector, whereas the private sector remains a much smaller part. It's growing, and we see that on the green bond, on the right chart, you have the green bond. The private sector now is issuing more green bonds than the public sector, which is not the case for the social and sustainability bonds. The last, on the left chart, you'll see also the 0 to 100 million threshold of bond is extremely limited. It is in that category that Symbiotics is issuing bond. The vast majority being, we have an average of 10 million by bond issuances, so even on the lower range of this 0 to 100 million bonds. So which is specifically a reason why we want to bring these green, social and sustainable bonds to the emerging market, because we see that there is a huge need to issue more of these bonds in the market. And we have launched this, well, first maybe just a quick introduction on Symbiotics, and then I'll present the platform. We originated 8.6 billion in impact debt over the last 17 years. And we today have around an outstanding around 3 billion, with an origination per year of 1.2 billion. Around 50% of that origination is being done through bonds, not all labeled bonds, sustainable bonds, as we have started actually with bonds, issuing bonds already more than 10 years ago, and it's only since 3 years that we have launched the sustainable bond program at the level of Symbiotics. All our investments are in emerging markets, emerging and frontier markets, where very often actually there are very limited bond issuances, labeled bond issuances that have been done beforehand. So this is why we have launched this bond issuance program, with the aim of having making it easier for both actually investees but also investors to get the possibility to have a bond, to buy a bond in emerging market with a relatively small ticket size to start with high impact project in the end. So I think it's really to give investors access to emerging market through a product that is a bit more standardized, and to somehow repack what used to be our main origination before into a product that is again more standardized for investors. On the investee side, I think it has one very good benefit as well, which is the fact of being one entry point by the contact with Symbiotics, of having access to a multiple number of investors, that are not used to invest in these countries. I'm thinking typically of an off-grid sector in Africa. It's a sector that is quite difficult to invest in if you don't have a team on the ground. So we represent this team on the ground and give access to investors through the bond issuance to have an access to this opportunity. I think it also allows to give more publicity to the sustainable bond program in general, to the product as such in emerging markets, and hopefully push more of these bond issuances happening in emerging and frontier markets. So as of today, we have issued now in the last 3 years for around 40 issuances for 400 million, so 10 million in average per issuance. The majority of them are social bonds. Again, it's the traditional market that we have been covering in the past, but of course we want to push very much the green product as well, where we see that there is a huge need in the markets where we are going, and there is also a lot of demand from investors, and I think that's really where we try to find a match between the two, bring the two together through these bonds. And finally, the sustainability is also a very good entry point for some institutions who have, thinking especially of the microfinance sector, where they have a large microfinance portfolio, so a very large social impact on their portfolio, but very little green products for the time being, and they want to start with it. So I think it's a very good point of entry to have more green products being offered to micro entrepreneurs or to SMEs in emerging markets. Looking more specifically about the Greenlight Planet Green Bond, actually there's not one green bond. We started lending to GLP, Greenlight Planet, in 2019. Today we have issued 3 green bonds. Altogether, 18 investors have participated to these different issuances. And it allowed us, again, why you would say, well, already we are doing very small size. Why did you do 3 issuances? Well, on the one hand, I think it's a question of timing. The borrower doesn't necessarily have all the needs at the same time. And then we also structured the transactions in a way that it could fit different investors' requirements. So typically the maturity, there's a different maturities between 18 and 48 months. Some transactions were secured, others were unsecured. And we also have a mix in terms then of interest rate, as the feature of the bond was not the same for each of them. So I think that's the transition to Krishna. So as I mentioned, Krishna came from India. He's the global CFO of Sun King / Greenlight Planet, and he has been with Greenlight Planet now for the last 3 years, and I think 3 years of very strong growth, including in partnership with us, and I think I'm very happy to have him here. Thanks.
Thank you, Daniel. Hello, everyone, and thank you for having me here. As Daniel said, I'm Krishna Swaroop, Global Chief Financial Officer for Sun King or Greenlight Planet. Been here with this company for the last 2.5 years, and I want to take this opportunity to introduce to you what we do in Sun King and the size and scale of our operations. So before I start my presentation, can I have the video to be played, please? The first one.
I can tell you how Patrick and I met. We met probably at about 3 in the morning in a dark electronics laboratory. And we were both working on 2 different startups. I was working on something else, and he was working on Green Light Planet.
When I joined the company, it was 4 people. In a small room, maybe twice the size of this room.
Right now we are at over 1,100 employees.
We've also become a lot more diverse, from a team of mostly engineers, field salespeople, and a few admin, finance, ops individuals to people that actually have a background. A combination of direct sales and selling through distributors, and we can sustain that story long enough to feel very confident in it ourselves, and also to raise money for investors. That was critical. It then enabled us to raise investment and grow.
If you asked any consumer in the world to pay for 5 or 10 years of energy access all up front, they'd say, well, it's way too expensive, I can't afford it. And the same thing turned out to be true for off-grid people. So we were asking consumers to buy an energy system or a solar kit that would last for 5 or 10 years, but pay for it all at one time. With our pay-as-you-go distribution program, we can allow people to take home a solar off-grid system for just a very low down payment, and then pay for the system over time. And they pay it off in less than a year and then own it for the life of the product.
We started Pay As You Go in January of 2016. We call it internally Easy Buy. And over time, with its continuous growth for the company as well as that for the entire industry that we have seen in Pay As You Go, reaffirms our belief that this is the future of how we continue to serve the community that we are invested in a sustainable way.
The sales agents on the ground, we have thousands of sales agents in rural villages across sub-Saharan Africa, Asia, and these sales agents are earning a livelihood from distributing and servicing the products and keeping a lot of that revenue in the community.
We started, like everything else, you started small with a few orders, and over time, the relationship really flourished, orders got bigger, new products were being introduced, and so now we are here in 2019, and I just can't imagine our business without people.
Whenever you're entering a Green Light Planet office, there's immediately this vibe of innovation. We are young, we're doing something new, and we continue that culture, and that's brilliant, really, yeah.
So this presentation makes my life easier rather than me starting from the scratch and explaining what we do. But if I have to summarize, or introduce our company to an audience like this, I would say we are the largest off-grid pay-as-you-go solar home system company in the world. So there's one statement that defines our business, and there are three components of this. The first is solar, pay-as-you-go, and off-grid. All the products we sell are renewable energy-based, solar-based. So that makes it by definition green in the sense that we are not dependent on any fossil fuels. The second one is pay-as-you-go. When we, as Patrick mentioned, who is our CEO and the founder of the company, mentioned in the presentation earlier, the customers that we serve are typically from the low and the middle income communities of the countries we work in. So expecting them to pay, you can have the best product in the world, best renewable energy product in the world, but that's not affordable to them. So what we have to do is to make it affordable for them to start using that product. And pay-as-you-go is the platform which helps us sell that product. It is pay-as-you-go is a variant of consumer durable financing, as we know in the more developed markets. So what happens is that the product, the customer pays say 8 to 10% of the product value upfront, and the balance is paid over a period of time. So 9 months, 12 months, 18 months, 24 months, depending on the size and the price of the product. So this is what we call as pay-as-you-go, because the customer is paying as he is using the product. And the third element is off-grid. All our products are focused towards off-grid customers. Means those customers who don't have access to a grid-based electricity or a utility platform. Simultaneously, off-grid is also applicable to my products in the sense that they are standalone off-grid products. They don't feed into the grid. They don't take power from the grid. They're standalone distributed energy systems. So while off-grid is the largest part of our product profile, technically speaking, we also focus on weak grid customers, or those customers who have, for the name's sake, an access to grid, but have inconsistent supply. So if you go to a lot of these developing countries, especially in sub-Saharan Africa, and you step out of the urban areas, even say you go to Nigeria, you go to Lagos, and you go 30 kilometers outside Lagos, you will have people who have grid electricity, but the energy supply in the day will be for 6 to 8 hours, or no supply for 16 to 18 hours a day. So they are not technically off-grid, but they're weak grid customer or inconsistent grid customers. So our products help also as a lighting source and energy source for those customers. So when we say off-grid, we also focus and include weak grid customers. So this is our business, and in this business, we are the largest in the world. As Daniel said, I'm the CFO for the company, so I like a few numbers. And if I can just put some numbers in context, we have around $350 million in revenue. We have grown 4x in the last 3 years. When I joined this company, it was $90 million in revenue. This year, we're on a run rate for $350 million. We have a 53% market share by volume in the sector, and that's why I said we are the largest in this segment. We add around 2 million clients, 2 million individual clients every single year, and we have 16,000 agents who are working in various villages across sub-Saharan Africa and Asia. Almost 10,000 of the 16 are in Kenya, 5,000 in Nigeria, and 1,000 to 2,000 across other countries. We install around 160,000 solar home systems every month, and we also sell 30,000 smartphones. This is a business that we recently started, and we sell 30,000 smartphones a month. Total consumer financing that we have done over the last few years is crossed close to $500 million, and this year we are growing by 80% in terms of revenue. That's a few numbers in context. As I said, 16,000 agents, and almost half of them are women. So we are not only providing energy, we are also one of the largest rural employment generators in sub-Saharan African countries that we work in. We work in 5 markets currently, and we have 2 large markets, and we have a track record of starting and scaling up those markets pretty rapidly. We take around 2 to 3 years to start in a market and stabilize our portfolio. We start small typically. We experiment on what kind of product, what kind of price point, and what kind of repayment profile works for the customer. And then once the right spot or the sweet spot is found for these kind of products and pricing, we start scaling up. So for example, in Kenya, we started in 2016, the pay-as-you-go operations, and till 2018 was the pilot phase, and when we were testing various products and prices. And since 2018 to 2022, over the last 4 years, we have reached a revenue of close to $125 million in Kenya alone. In Nigeria, we started in 2017. It was a significantly more challenging market owing to many other different peculiarities and macroeconomic factors in West Africa. We started in 2017. The startup phase was pretty rough. It took us around 3.5 years to stabilize it. But since 2020, where we had a revenue of close to $1.5 million, right now in 2022, we are on run rate for $85 million in Nigeria alone. So that's the kind of scale up we do once we stabilize the market or we find the right spot for it. So how does this pay-as-you-go work? So as I said, we have around 16,000 agents who are going across villages in our country. We have 250 stores, again spread across the various countries we operate in. So the agent comes to our store, picks up a product, goes door to door in a village, demonstrates the product and enlists the interest for the customer. So once the customer is interested, he carries an app on his phone. The agent carries an app. He registers a interest or records a sales lead. That sales lead goes back to a call center which we have in each of the countries where we operate in. And there you have a credit agent who verifies all the data, the customer identity information, address, income profile, loan profile. And please remember, we work with low and middle income communities in the countries we operate in. So 85% of our customers, when we first meet them, do not have a formal credit history. Yeah? So it's effectively a completely new credit underwriting from our end. And we don't have third-party information. So there are no credit reference bureaus or things like that where we can simply type up their name and get the credit information. So what we do is primary credit collection. We talk about their what kind of home they live in, how many people are there in the family, what are the income sources, what are the liabilities, and things like that. So the field agent who's registering the sales interest is collecting all this data, and then the credit agent sitting in the call center on a phone call, with a tripartite call with the customer and the field agent, is verifying all this data. And then he's also explaining the product profile, how much he has to pay, all these things. And once that is done and the credit agent is confirmed or he's satisfied that the customer will be able to pay, he then approves the credit and the sale happens on the field. So once the credit is approved, then the customer pays the upfront deposit, the agent installs the product at the home, the field agent, and then every day or every week or every 15 days, whatever is the credit or the repayment mechanics that have been agreed with the customer, he makes the payment. So every time the customer makes a payment, he gets a code on his phone. So let's assume it's a $500 product. He makes $50 payment upfront. The product is installed at his home. And then on the first day, he makes $5 of payment. He has to pay $1 every day for the next 450 days. So that's the product repayment contract that was agreed with the customer. So if he pays $5, he gets a code on his phone. And if you see the product, the fourth picture on that, you can see a blurred out keypad. He punches that key, the code that comes on the keypad, and then the product starts to work. It lights up your home, the battery starts to work, the panel starts to work. And on the 5th day, once the credit is expiring, he gets a reminder that you have to pay for the next round of credit. So it's like a prepaid credit or a prepaid SIM card or a Netflix subscription that we are all used to. So you paid for the front and then you paid for a number of days. And when it expires, you get a reminder message. You pay for the next cycle, you get a code, you punch it, it works. You don't pay for the next cycle, the product shuts down. So this is the inherent checks and balances to ensure your product portfolio quality. So the agent installs the product, then the regular payments are happening, and then at the end of the product profile, at the end of the payment period, so let's say if the product was for, as I said, for 450 days, at the end of that period, he makes the final payment, and the last code he gets unlocks the product permanently. Yeah? So at the end of 18 months or 24 months that he has paid for, the customer now has a solar product that will work for another 7 to 8 years and provide him electricity completely free of cost and he has developed a formal credit profile which he can use to either buy more products from me or to access credit from the traditional banking channels. So that's how this operates in. Now, typically what we think of when we work in this low and middle income communities, and especially in sub-Saharan African economies, is that how do we manage such a large portfolio of 2 million plus customers, and with loan amounts ranging from $50 to $100 million on an average, and how do we control the defaults? So first thing, as I said, we have the product itself is automated in the sense that unless you pay, it won't work. It's like a prepaid credit model. And two, we have upgrades. So the customer, if he maintains a proper credit repayment speed, then he's eligible for discounted pricing on the next upgrade product. Yeah. So and things like that. So and with all these things, our current portfolio quality is 92% plus in terms of repayment. To put it a different way, our defaults are around 8% on an average across all the countries. Given the African economies and the performance of microfinance and other financial institutions, I will probably very confidently tell you that this is one of the best across the portfolio of all the industries that or financial services industries in that region that we work on. We process around 15 million individual retained payments every month. And average revenue per user is around $10 per month, and a long-term value per customer is close to $500. Because what we have seen is that once the customer starts to buy a small product from us, after he completes the first cycle, he then upgrades to a larger product and then to a larger product. These upgrade sales, which were close to 4% in Kenya, I'm giving Kenya because that's the largest market, which was 4% 2 years ago, is now 40% of our customers who complete payment for their first product are buying a second product from us. So that is how we are also helping customers move up the energy ladder. So our job doesn't end by providing 1 light or 2 lights at a customer's home, but our products range from a simple 6-watt panel with 2 lights all the way to a complete solar inverter of 300 kilowatts, 300 watts, which can power up a mid-sized home, say 2 to 3 bedroom home in a rural area. So the customer is able to then manage or grow up the energy chain by paying for these products over a period of time. This is the latest product that we have. We are about to launch. We are running pilots which have been pretty successful, and we hope to commercially launch this around the holiday season end of this year. This will be a 800-watt panel, a complete grid equivalent solar inverter. So this is targeted at consumers and businesses which rely on generators. So if you have gone to any of the sub-Saharan African countries, and not only sub-Saharan African countries, but many Southeast Asian countries like India or Philippines or Indonesia, you also have a lot of businesses and homes which use diesel generators. Nigeria alone, one estimate says, spends $27 billion a year on diesel for generators. So these solar inverters will help replace all of those diesel gensets, because this is charged from solar and can power up all the direct AC grid appliances that are already existing in a customer's home. So this is our latest product, which hopefully should go for commercial entry by end of this year. So in terms of impact and green bonds and social bonds that we spoke about, the domain that we work on is basically access to energy. That is what we started off with. But ancillary to this access to energy is also access to financing. As I said, most of our customers, 85% of our customers, do not have formal credit history when they start working with us. So we are helping them create a credit history and access the traditional financing channels so that it helps and improves their quality of life. And apart from that, we also spoke about we are one of the largest rural employment generators in all the countries we work with. 11,000 agents in Kenya, 5,000 in Nigeria, and growing. 50% of them are women. So we also have working on gender diversity and inclusion. And so this is on these are all the ancillary benefits of working on access to energy. And the last piece is clean energy. As I said, we are all of our products are solar based. So We have replaced almost 7 million plus kerosene lanterns till now, and 22 million tons of carbon dioxide have been offset from the products that we have sold till date. So this is a small brief presentation about our business. And now coming to a topic that is more relevant to the audience sitting in this forum is, given the nature of our business, the kind of economies we work with, the kind of customers we work with, what are the challenges that we face in terms of financing this business? So as we said, this is a consumer financing in a different form, which means apart from the product itself, finance also is an input into the business. Funds are an input into the business. They are simply not capital alone. They are a key input to the business because that is what we are building up, a portfolio or a loan book. So challenges are, given the economy, what is the, how do we finance this at scale? It's easy to find impact investments of $1 to $5 million, but now given that we are a $350 million company, finding financing at this scale is a challenge that we are trying to solve for. Second is local currency debt availability. Each of these markets, most of our revenue is local currency, and all the markets we work with are volatile in terms of foreign exchange. They're not stable foreign exchange markets. So which means that you need to find debt sources which can match with your revenue profile. Otherwise, you're creating a recipe for disaster on your balance sheet. And so local currency debt and forex challenges go hand in hand with this. And the last one is complexity and turnaround. Anecdotal evidence, 2019 and 20, Daniel said we closed a green bond with 18 different investors within 8 weeks this year. Before COVID in 2019 and 2020, to get 7 investors to lend us $60 million took us 22 months and $2 million in legal expenses. Compared to that, getting 18 investors funding close to $40 million in 8 weeks with probably 2% legal cost of what I said earlier, that's the difference that a platform or a green bond mechanism like this can make to companies like us. So complexity, financing at scale, and the forex challenges. These three are the main components or financing issues that we are trying to solve so that we can maintain this momentum in our business. And if you look at companies like us, we are one of the largest in the sector, and there are a couple of more other companies also who are doing work similar to us. Compared to them, as I said, we have the largest scale. So opportunity with us is that once you invest with somebody like Greenlight or Sun King, you are investing into 50% of the market. That's the largest scale that is possible in this sector. And given that we are looking at 7 different countries where we're operating in direct portfolio, that's also well diversified in terms of risk. And this is perhaps the most diversified retail portfolio of loans that I can think of. And in terms of funding that we have raised since last 6 years that we have been accessing foreign credit, we have raised close to $400 plus million, of which $260 million equity was raised in this year alone. We now have reputed investors like General Atlantic and M&G as part of our capital table. And we also have commercial banks like Citibank, Stanbic, and impact investors like BII, FMO, Norfund, all of them participating in our investments, both equity and debt side. So that was on our strength and our opportunities. And I also mentioned about what roles market access players like Symbiotics have already played, and the impact is there to see. I'll take a pause here, and that's all from my side, and open for any questions.
Thank you, Krishna, for a very interesting presentation. I don't know if you want to open the floor now to the questions, or if we wait for Rosmarine, but we can maybe, if there are a few questions to Krishna now, we can start with. Yes.
Hi, thanks for the presentation. Tim from Alpha Mundi. A couple of questions. One of them is on collateral. I mean, you have a fantastic repayment rate. but we are living in a period of black swans. What happens if you have an external shock across multiple markets that you operate in? Do you have any form of collateral for your loan book? And also, what are the plans for the next bond issue?
Yeah. So for our retail investors, as I said, the product doesn't work if it's not paid for. So the utility of the product is lost to the customer unless he maintains the repayment profile. So in that sense, it is actually a secured loan that I'm giving to the customer. And legally, I have a right to repossess every single product I sell till the last payment is made. So it is a secured lending, not in the sense that you wouldn't find a secured loan document with every single customer I do. My loan document is 1 page long with the customers. Yeah. So, but legally it is secured in the sense that I have a right of repossession, and more practically speaking, the product loses utility for the customer if it's not paid for in time. So that is the biggest check and balance, and that is what is adding to that 92% repayment profile that you're seeing. For our lenders and our investors, the collateral we offer is the receivable book and the inventories we maintain. So we have on-balance sheet debt where the recourse will be to us and to all the assets that we have. And we are also working on off-balance sheet receivable financing, traditional securitization kind of models that we know in Europe and US. They have not been done or very frequently done in Africa, outside of South Africa. South Africa, there is a healthy market for securitization, but outside of South Africa, there is none in the entire continent. We are trying to do something of that nature in Kenya. So the collateral in that structure will be the entire receivables under the portfolio.
Thank you. Yes.
Thanks. Really exciting to hear about what's going on, particularly since I remember following the Mobisol challenges and the fact that it turned out that this was even less affordable, I think, at one point than was initially expected. So I was just wondering, how does one overcome these challenges so that this actually has become more affordable and you're running such good numbers? And then as an addendum, just wondering, because you didn't talk at all about maintenance. Maintenance is a huge part of this. How do you think about that? And actually, is it part of your business model, or is that something that's decentralized?
Yeah. So the first part on how to make products affordable, the way we design our payment plans, we try to see what is the product we're replacing. So for example, our entry-level products, which aim to replace kerosene lantern. So the daily payments on our entry-level products are designed in a manner that are probably 10% cheaper than what a customer would pay for buying kerosene every day to light lanterns at his home. So that is the way we design our payment plan. And then as we move along the value chain, the next product that comes after that will be slightly costlier, but not significantly different from the daily payments. It might have a longer tenure, but your daily payments or the financial commitment that you expect from the customer to make on a regular basis for the contractual period will be very similar. So that is how we design the products, and that's why, depending on the price, your loan tenure can range anything from 9 months all the way up to 24 months. And strictly speaking, while we have a contractual tenure of say 9, 12, 24 or 18 months that we speak about, the customer is not necessary, or there is no penal consequences for the customer if he skips a payment. So let's assume he pays for 30 days and then he doesn't have money, he doesn't pay for 5 days. The only consequence for him is that the system wouldn't work for 5 days. He wouldn't have light at his home. But on the 6th day, if he wants to come back on the plan, there is no penal interest, and he doesn't have to pay 6 days of light for in 1 day. He can still pay 1 day on the 36th day and still get electricity from that day. And that is why, while we have a contractual tenure of say 12 to whatever the contractual period is, the repayment would be slightly higher than that. So this gives the customer enough flexibility that he can match his payments with his income profile. But more basic to that is how we price the product and what is the payment tenure we speak about, we think about. So that's on the affordability side. On the servicing and the quality of product side, all our products come with a 2-year full replacement warranty, which means that if the product develops any snag, any problem in the first 2 years of sale, it will be fully replaced. Of course, not covered under warranty is physical damage or theft, which obviously we can't control. But if the product has a quality issue, we replace it for the first 24 months. And even after 24 months, if there is a product problem, they can get it to our store, or they can even call our agent who will collect it from them As I said, there are 10,000 agents going around every village in Kenya as we speak. So they do 3 or 4 roles. One is your credit check, sales, third installation, fourth is servicing. So they also pick up the product. If the customer calls up and says this product is not working, they pick it up from the customer's place, get it to our store. If it's within the warranty, it is either repaired or replaced. If it is outside of warranty, it is repaired at a nominal cost. So that is how we ensure the quality or the servicing of these products.
Yes, maybe one over there.
Hi there. Thank you so much for the talk. I just have a quick question about the Forex risk and the challenge you noted. And you, Daniel, noted that the bond was denominated in US dollars. So just given kind of local currency revenues, just wondering kind of what sort of Forex considerations were taken into account when structuring the bond. And then maybe just a broader question about the sustainable bond market. Given a lot of it seems to be denominated in US dollars, what is kind of the current state of play given the dollar appreciation? So, 2 questions.
Yeah. So on the Forex part, yes, this green bond was denominated in dollars. So there are 2 things that drive that decision. One is, while I say we need local currency debt, not 100% of our debt needs to be in local currency. There is a balance, there is a, because all our imports are also in dollars, we also have to match those payments. If I take in local currency, then converting that into dollars to pay for my imports becomes a bigger challenge. So we follow a mix of local currency and hard currency debt that we look for. And what we took on the green bond program was on that portion of hard currency that we were actually looking for. Of course, there are also instances where we would have liked it to be local currency in some other situations, but honestly, the market is not there yet. It's not available, so we end up taking hard currency debt and we try taking hedge on that, a synthetic hedge or any other non-deliverable hedge, so that we can at least cover the P&L part of it, the fluctuation part of it. On the larger sustainability bond market, I will ask Daniel to respond.
It's a very good question in the sense that I didn't mention before that Semiotics has a huge capacity of local currency origination. We have today, dollar is 30%, 35%, more or less 1/3 of our portfolio. So we are doing a lot of local currency, including a lot of unhedged local currency. Why we did not structure this transaction specifically in local currency, I think, as Krishna said, there are issues on your end, I think, because of the import that you have to pay in dollar. But we are issuing a lot of local currency label bonds or non-label bonds. Basically, loans in local currency is something that we are doing quite a lot, and it's a real and very acute issue that many of the borrowers are facing, and where we really want to make this point that there is an offer in local currency and there is an increasing offer in local currency. Of course, the current context is not necessarily the easiest, but that being said, we see that all our local currency portfolios have been, including the unhedged ones, have been actually resisting extremely well in the current context. And this is thanks mostly to you have a higher coupon, of course, which protects you to some extent through the depreciation of the local currencies that we are exposed to. Yes. Maybe we'll take one or two additional questions, then we will move to the next part, and then at the end we may have some more time.
First of all, congratulations, amazing company. My first question is related to hacks. How you are preventing the hacks in this kind of small systems that are low budgeted? How you prevent these systems to be hacked? And my second question is related to having such an amazing ARPU. Are you going into the fintech path? What's your digital fintech path in the next 5 years or 10 years, knowing that you already get all the finance together, and probably the most expensive thing of it, having that such a great customer base?
Yeah. So on the first part, on the hacks, I think all our products have what you call tamper alerts. So if the customer tries to make any software or hardware changes, we get an alert at the back end. So that is when we start. So there are two things happen. So when one is tamper alert, Sometimes tampered alerts can also be fake alerts that are generated. So what happens is that we watch for the repayment profile. If there's a tamper alert and there is no change in the repayment profile, then there's a 90% probability that the alert was not the right thing to do happen. So we don't respond in those situations. But if there is a tamper alert followed by a repayment profile deterioration, or even without any tamper alert, if there is a repayment profile deterioration, then we have an escalation mechanism. So if the customer doesn't pay for 3 days, there is a reminder SMS that goes. If the customer doesn't pay for 7 days, then there's a call that goes from the call center. At the 14 days of default, the agent gives him a call. At 30 days of default, the area manager visits the customer, and so on. There is a graded escalation mechanism, not only for tampers and hack, but even for a normal non-repayments. And as I said, our biggest strength is 10,000 feet on the ground. So we have people who are going across villages, doing not only sales, but constantly monitoring the portfolio as well. So that gives us the enough depth and the reach to those customers. And each of our products also have a GPS location. So if they are moved, they are tampered, all of that is remotely monitored. Yeah. On the second one, on the fintech platform, yes, all the ingredients are there, but are we? Do we have thoughts about that? Yes, we do have. Do we have business plans around it? No, not yet. So because that sector or that segment is already crowded, if I can say that. There are enough lending platforms, enough fintech platforms which are coming up for giving cash without any attached purpose to it. And that is the biggest risk. You need to have utility to a product. One of the strong reasons, and I reiterate this point, why our portfolio performs as well as it does is because there's a utility associated with that. You don't pay, you don't get light at your home. That's not so much with, say, $100 I give in a fintech platform or a digital lending to a customer. It's difficult to enforce that. And there are enough microfinance institutions and local small lending agencies which are catering to this population. And also fintech companies they have mushroomed so many, even in this economies that we're talking about, that right now we are looking at them, but we don't have any concrete plans to enter into that.
Maybe one last question, and then we'll move on.
Hi. Thank you so much. Also really amazed by what you're doing. So as you mentioned, there's more and more companies who are also doing a similar business model as you in terms of solar power or also electric vehicles. So my never-ending question is the first solar panels are seeing their end of life today. Actually, it's been 20 or 30 years now since they were first installed. So my question is how, as Sun King, you're not a producer, but you're delivering solar panels all over Africa, and how are you what is your long-term strategy in terms of EOL? How do you see this going once these customers have their solar panels seeing their EOL? What are they going to do? Are they just going to throw it in the landfill, or do you have some sort of partnership with a recycling company?
Yeah. So electronic waste management that we talk about here, we already have a program where we encourage trade-ins. So if you have an old product, you can get it exchanged at our stores and get a discount on the next product that you have. So we encourage trade-ins. And in terms of waste collection, so there will be products which are at end of their life and there is no more utility left into that. Till now, the problem was not acute. As we said, we are only 10-year-old company, and others, the sector itself has started somewhere around 2010, 2011. So this is when the scale starts to really impact. Right now, we are doing scrap collection and recycling with recognized, authorized collection agencies. None of the countries we have any electronic scrap recycling units locally. But we do collect and hand it over to authorized agencies. But yes, we are looking at larger partnerships where we can actually do the collection ourselves and give it to a recycler. Again, as I said, recycling agencies are not available, or recyclers locally are not available. all of that is aggregated at the Africa level or the country level and then sent off to, say, Middle East or anywhere where there are existing facilities for recycling.
Thank you.
Thank you, Krishna. So we'll maybe have time at the end for some more questions if there are, but I would like now to ask Rosemarijn van der Meijt from ASN to do her presentation. And well, Rosemarijn has been with ASN as the Green Fund Manager for 3 years now, and before that had a very extensive experience with FMO, the Dutch Development Bank, so very knowledgeable of the impact investing sector. So the floor is yours.
Thank you, Daniel, and thank you for inviting me here today to speak to the investor crowd, of which I'm one, and I'm a happy investor to be working with Symbiotics to make nice investments for our private retail investors in companies like Greenlight Planet. This is the big button. All right. So the company I work for is called ASN Impact Investors. We're a Dutch impact investing company. And most of the activities we do cover the world. We're an asset manager. We have a strong vision on impact investing, and we have very strict sustainability policies. So anything we want to finance, any company or any initiative first has to make a positive outcome in our sustainability test. We have 12 listed funds under management. I don't know if any of the crowd here is aware of the whole SFDR obligations that are imposed on the impact investing companies in Europe. We're Article 9 funds, so we are the truly dark green funds. We have 9 SRI funds that with a special theme invest in water and environment or in sustainable listed equity. We have some mixed funds with different risk profiles. And then we have 3 impact funds. We have a microfinance fund. And we also have worked with Symbiotics and work with Symbiotics with our microfinance fund. Since November last year, we are very proud to have launched a biodiversity fund that invests private retail investors' funding into biodiversity projects, mostly in forestry and ecotourism. And then we have a sustainable energy fund, of which I am the proud fund manager. In total, as per September 2022, we have 3.9 billion assets under management. And unfortunately, it was a lot more at the start of 2022. But I think that has happened to more of us here present today. So we have a very strong sustainable mission. And we only invest in companies, institutions, and projects that not only aim for a financial return, but mostly strive for a positive result on climate, biodiversity, and human rights. These are the 3 pillars of our sustainability policy. So it's people, planet, and profit, and make a future-proof world. So climate obviously is important, and with our Green Project Fund, for instance, we support the climate pillar. Biodiversity, we need to build a strong biodiverse world, for which we have launched our Biodiversity Fund. And for the human rights, obviously it has a widespread angle, but for us, for instance, with our microfinance fund, we aim for financial inclusion, decent wages for people who work in the companies that we finance, for instance, and in the projects that we finance. So we have a lot of criteria that are tested before we even look at the financial side of projects or investments that we make. And it's not exchangeable. The financial return, if it's super, but on the sustainability side, it doesn't look that good. We don't make the investment. We're very, I think, unfortunately, still very exceptional in that respect, but it's the way we work. And we do still realize a financial return. In the end, we measure a lot of impact in terms of what we report in our impact reports, and we have set long-term goals, because obviously sustainability is not something that is achieved in a day. I think it took us a long time to get the world into the dire situation we're in, and it's going to take a long time to get it back to a better level. We aim to be climate positive with all our activities by 2030. We want to have positive impact on biodiversity by 2030, which means that we measure the positive or negative biodiversity hectares that we invest in. And then in terms of human rights, we have specifically picked out the clothing sector, whereby there need to be decent wages for all the people working in the clothing sector, in value chain, at least for all the companies that we are willing to invest in, or all the projects that we are willing to invest in. So we have a huge sustainability expertise center with a number of colleagues who determine our universe for our listed equity funds. And we also have analysts who do a lot of the research for the investments, for instance, for our Green Project Fund. So when Symbiotics presented the investment opportunity in, for instance, Green Light Planet, I get an investment advisory report. And then in addition, I always call Daniel and say, thank you very much. However, shall we first discuss the sustainability criteria? So then we either request for more information if it's not already provided in the report. And otherwise, we do a lot of our own homework by researching the web and making further inquiries with the companies. So we do a positive selection for companies and projects in our portfolio. It's do good and do no harm. And the do harm companies will not be in our universe. And companies that are in our universe are being reassessed every 2, 3 or 4 years, depending on the level of harm or no harm that they've been assessed at the initial assessment period. So, for instance, we have a long exclusion list of things we don't do, and one of them obviously is fossil fuels, mining, intensive agriculture we don't do, which is interesting since we're a Dutch company and we have a lot of intensive agriculture in the Netherlands, but we don't finance intensive agriculture. And we do invest in circularity, for instance, the recycling of solar panels. The fund that I manage finances a lot of solar plants. Recycling of the solar panels at the end of the life of the panels is one of the requirements we have. So if there's no plan, we can't finance the project. And it's challenging because there is not yet a lot of recycling implemented in the sector. And recycling companies are still fairly scarce, I have to say. Reusing circularity. Still difficult market as well, still very early stage, but it's something that we also try to focus our energy on, and especially renewable energy and energy efficiency, and that's where we also have a good fit with the GLP investment. So the 12 funds that we manage, it's sustainable equity, we have a sustainable bond fund that has sovereign bonds, and all those bonds are also assessed. Then we have a number of mixed funds and the 3 impact funds. They're listed on the Amsterdam Stock Exchange. Private investors can invest on a daily basis, but also divest on a daily basis. So in these turmoil times, it's quite challenging for us. Well, I think one of the impact indicators, we try to limit the number of impact indicators that we report on because it's too cumbersome for our investees and even for us to collect all the data and to really have valuable, reliable data is very challenging. So for the Green Project Fund that I manage, I only measure the CO2 footprint, and basically we collect data on avoided CO2 emissions. Does that mean we don't look at other things? We do, because of this very strict and elaborate sustainability policy that we have. However, for our investees, we only ask them to report on a quarterly basis, and usually it's on an annual basis, because otherwise it's too cumbersome, CO2 emissions. So in this case, for instance, the number of solar panels that have been sold, and then how much energy they're generating, and then unfortunately, there's a lot of standardized, harmonized data, how you then can calculate how much CO2 emissions are being avoided on the basis of the number of solar panels. The same for the biodiversity footprint. Again, we measure how many hectares of positive biodiversity we've been financing, and also we deduct all the negative biodiversity hectares that have been financed. Social performance is especially important for our microfinance fund, where they create access to finance. And especially in our listed equity, we're very strong on engagement and voting in shareholder meetings. Usually there's a number of listed equity companies with whom we actively engage to see if they're going to comply with the actions that we've determined for the companies, for us to remain invested, and if they don't live up to the actions soon, quick enough, then we divest in the companies. So the fund I manage currently has 400 million assets under management. 90% is currently invested in the Netherlands. It's a Dutch fund. All our investors are Dutch retail clients. So we have a pocket that allows us to also invest in emerging markets. It's currently only 10% of the assets under management. We have 2 transactions in the portfolio with Symbiotics, both through their bond program, which is extremely efficient and very practical. You basically buy a bond, a stake in a bond on the Luxembourg Stock Exchange. It's very efficient. And we have also participated in one of their green bond programs, which is the investment in Green Light Planet. Our company works on an outsourcing basis. So we have no investment officers, but we hire investment advisors. And we can work with different investment advisors for the Dutch market and for the emerging markets. And the investment advisors go through an accreditation process, basically. And if their own, for instance, sustainability policy complies with our requirements, they become eligible. And if their governance is in order and complies with our requirements, then we can work with the investment advisor. And then the next step will be that they can source transactions and present them to us. And then we go through an assessment of the information that they provide. And then our investment committee can decide whether the proposed investment provides a good enough fit with the investment mandate. Currently, we have a focus on, in the renewable energy sector, on decentralized energy with heat pumps and on solar and wind. And in that sense, GLP really fits the mandate really well, because it is solar and decentralized energy. And it creates access to energy for those people who don't have it, because there is no grid or it's an unreliable grid. Well, obviously, this is also about SDGs. The 3 SDGs that the fund targets is access to energy, number 11, and clean climate action. Oh, it's here. And we also report in our impact reports on these SDGs. Just the fund, by choice, does not invest in emerged markets, but only in emerging markets, and we are predominantly invested in Africa and in Asia. And we like to do co-investments with partners, again, because we don't have our own investment officers. It's for us efficient to work on a partner basis with companies like Symbiotics. They're very knowledgeable. They often have also feet on the ground in the markets that they operate in. They allow us to join their due diligence when they're going to visit the targeted investments. And it's like the movie you've just seen about Greenlight Planet. Nothing makes an investment more tangible than just going on the ground and seeing actually where your funding is going, what the local challenges are that both the investees but also the investors may encounter. And it helps you also to be able to better share your story with your own investor background. Then it's very efficient to use the platform that Symbiotics has developed, because they have done a lot of the paperwork, and they provide you with a draft contract that you can then, with your own legal advisor, go through, and it makes the whole investment process very efficient. If you have specific requirements, for instance, like we do on the sustainability aspect, you can add specific conditions to the contract with regards to, for instance, reporting or certain exclusions. They can be added to the contract as an addendum. And it makes it easier because you don't have to not participate because it doesn't fully comply with your requirements, but it allows you to participate and still add on additional criteria and conditions. Well, I think that's about all I wanted to share. Thank you very much for your attention. Are there any questions?
Thank you, Rosemarine. Any questions to Rosemarine or to any of us? Yes.
Thank you very much for this presentation. So you're mentioning and you're making a point on how important it is for you to invest on projects would be compliant with your criteria on ESG. So that's well understood. Could you just like develop a little bit more how you actually measure that and how frequently you report it internally? If I narrow a little bit my question, is like you've mentioned some SDGs, you know, and that's a reference, but maybe you use your own criteria for measurement and your own reporting that you've developed internally. And since when have you been doing it, please?
Thank you for your question. So we write an investment proposal, and then it gets, for instance, the investment in Greenlight Planet gets approved. We've added, or basically the investment committee has raised a few conditions with regards to especially the ESG aspect. So, for instance, we have a specific solar supplier panel, solar panel supplier list. There's a few companies that are excluded because through research and assessment, it's been our Sustainability Expertise Center has found that they are involved in the Uyghur question in China. So these solar panel suppliers are not acceptable for us. There's a number of solar panel suppliers that are acceptable. And even though we're not directly financing the solar panel suppliers, this is extremely important for us also because of our human rights pillar. So this list is added to the contract as an addendum, and on a yearly basis we will check whether there is compliance or not. And with regards to, for instance, the CO2 emissions avoided, they just need to report on a quarterly basis in a template that we provide. What's the production, what's the energy mix in the country, and what is thus what is our stake in the investment, and what is thus the CO2 emissions that we can claim and report on for our specific part in the transaction. We also check that on a yearly basis and on a quarterly basis because, well, this particular financing is not redeeming on a quarterly basis. But if there are redemptions, then obviously your stake becomes smaller. And in an annual review, we again go through the whole ESG assessment, and we will require more information as to how the company is developing. Our ESG department will do a further check on how, if there were any changes in our policy, if they're still compliant, and if any of the previous actions that we've determined and conditioned, if they have been complied with, if there's any progress, if there's no progress, if there is no progress, if it will be a reason to maybe call a default or ask for a waiver or get a improvement action plan. That's how it works for all our impact funds, actually. Obviously, in the listed equity side of our investments, we work with the engagement and the voting in the shareholder meetings, whereby we will vote against or we will engage actively to get them to improve their operations.
Hi, thanks for the presentation. You mentioned that your assets had shrunk over the course of this year. Maybe you could explain a few reasons why and what the outlook is given the market circumstances we're all expecting. Thanks.
What is a bit challenging for my specific fund is that, so we make investments that on a nominal basis have a value of X. But because it's all senior debt, and they are priced against a margin and a base rate for the market interest. If the market interest go up in the market, which they in the whole 9 months of 2022 so far have done, the value of the nominal investment decreases. So the market value of the investments in the portfolio, let's say the moment you make the first disbursement or the full disbursement, it's at the value of 100. And when the market interest rate goes up, the value goes down, not correspondingly, but at least there's a whole calculation behind it. It goes down below the 100. And that basically determines why the value of the fund, of the assets under management, unfortunately in 2022 have gone down. But on a nominal basis, which is for our private retail investors, in the end, what drives their investment. They're still healthy. I only have 2 very small problem loans in the Netherlands in the portfolio. So it's more attached to the valuation system that we are on a regulatory basis obliged to apply than the fact that the investments are not performing well, unfortunately. Excuse me? Your outlook for next year? Yeah, well, I think the market interest rate will still remain a bit unstable. And the expectations from our financial markets department is that by 2025, it should calm down a little bit. So it will be challenging times in the next 2 years to come. You're welcome. And obviously, this whole market valuation situation is for us a bit of a downer, but not necessarily for Symbiotics.
Hello. So just to elaborate a little bit more on the duration of the bonds and continuing the discussion of Tim. So I guess that the bonds that you are issuing, both Symbiotics and you for your portfolio, they are, could we say that it's a fixed rate, or are you able to create some bonds also with a variable rate in order to tackle these economic situations of nowadays? Or how do you do to avoid a little bit the risk? Thanks.
Maybe I can take this one, and
sure.
then you can add on. Or for our bonds, we can have floating rates, or we can have a fixed rate. I think it very much depends on the borrower. Meaning that in many markets and in many, especially the market segment where we are active, it's not necessarily easy for the institutions to manage the interest rate risk. Their portfolio is usually fixed. If we take the microfinance portfolios, typical microfinance portfolio, it's always a fixed rate at the end. So it's not necessarily easy for them to take the floating risk of basically the market that risk. Now, there are situations, especially when we are working more with the I would say, larger SME specialized banks, for example. There we have a substantial part of our loans that are the bonds that are issued in variable rates.
Okay, yeah. And I guess that from your side, from your perspective, are you hedging against interest rate movements or just about Forex? That would be the second question. Thank you.
Well, exactly. That's maybe almost more a question for Rosemarine, because again, we are issuing the bond, but then the asset manager who are buying the bonds, they each can have a different policy in that sense.
So Daniel's team is issuing the bond, and they're looking for investors. And some of the funds that Symbiotics in their asset management part of the business are managing may also participate in the bond, like the fund that I manage does. We, as a policy, don't hedge interest rates for the mere fact that it's way too expensive. But that's also, again, probably driven by the Dutch market situation. So I would recommend for any potential investor to consider its own market sphere to see whether it's doable or not. For us, it's just not doable. But maybe good to explain, in the portfolio, I have predominantly really long-term project financings, up to 18 years. If you would have to hedge that interest, that's just too expensive, and they're fairly small tickets. $5 million is usually the aim ticket size, because it's a revolving fund, so most of the investors, even though they can divest on a daily basis, they happen to be a very loyal group. I mean, the fund has been in existence for over 25 years, and I won't say all of them are 25 years invested in the fund, but a large part is. Nevertheless, since they can redeem on a daily basis, I never know what my cash situation will look like the next day. So to hedge the interest rate, it's basically the risk that the investors in the Green Project Fund take. Yeah, that's the risk they take. So we have a lot of mitigants on all sorts of country risk and portfolio risk, but the interest rate risk is just not hedged, and it's a risk for the investors. In the time when the interest rates in Holland, at least, were decreasing, they've benefited from a return on their investment. You're welcome. And again, for me, the Symbiotics transactions, which are fairly short-term, are very interesting from a duration perspective, because they are so much shorter, and they're not so exposed to the interest rate risk. So from a diversity perspective, it's a very nice instrument.
Hello, thank you for the presentation. Regarding Sun King and Greenland Planet, you spoke a little bit about your recycling policy and position right now and what you want to do for the future. But I was wondering, do you have strict criteria when it comes to the production, when it comes to materials and the conditions in which the solar panels are produced, or is not really a priority? I don't know.
No, we do have strict policies for production quality, sourcing, labor policies, all of that. All our production happens at outsourced factories in China, and each of the vendors that we have signs up to a sourcing and labor policies code that we implement, which is in compliance with the IFC standards, which is probably the best in class that we currently have.
You. I have maybe one question for Rosemarine. You mentioned that a transaction that would yield very well but has no impact, you would not do it. What's the other way around? Meaning, is there a trade-off for a transaction that has a very high impact and where you would take a lower rate, or is that the investment committee would just look at, well, it goes through in terms of impact, but then still we need to have a market rate?
I won't say we would never do it, and I won't say we will always do it. I think we are an impact firm. So for us, impact is important. And financial return is the second driver of our business model. So it really depends on the composition of the portfolio and whether there is a bit of room for a less generating transaction that really contributes to a specific impact driver that is important for us, or if you want to test something out, and if we have some room to try it out, and if we have some room for a less returning transaction, then we may do it. But it probably will take some convincing from my side in the IC, because I will be presenting the transaction in the investment committee. So I first have to be a strong believer that this is a good investment from both angles. And then if the investment committee gets convinced by my arguments, then it may happen.
Okay, thank you. Maybe one question also for Krishna. We talked a little bit about it over lunch. How do you see the off-grid business in 5 to 10 years with more and more people being added to the grid? Is it a danger for your model, or you see that there is still a big market? I think it's a point that can be very interesting for the audience.
Yeah. Most of the markets that we operate in, like the sub-Saharan African markets that we're talking about, 5 years, 10 years, probably 20 years from now, there will be pockets geographically and socially which will always be off-grid. It's physically and financially not possible to electrify all the sub-Saharan African countries the way some Asian countries have done. For example, the country I come from, India, has moved from to almost 100% electrification. That's not possible to be replicated because the cost of electrifying, and given the density of population in many of these countries is pretty small, there is just no financial return. You can't carry a grid line, say 50 kilometers into a village which is a hamlet of say 20 families. You just can't do that. There is no financial return to it. There will be no investment for it. So that is why if you see the national electrification policies of many countries have recognized this factor and now have allocated specific percentage of their electrification targets to off-grid companies or the off-grid sector. For example, Nigerian National Electrification Project allocates 30% of its electrification targets to decentralized power. So this is there to stay. Grid expansion will happen, but this is a market where we don't expect that grid electrification to start eating into us. And there is an interesting development. Of course, this is not widespread, anecdotal evidence, and I have seen it with my own eyes. I have visited 3 customers who have a grid line going in front of their home, but they're still using my product. Why? Because it's cheaper. Electricity cost doesn't increase with Ukraine war for our product. And it's free after 2 years of payment. So, yes, there is some crossover between them, but it's not a challenge for us.
Yeah, I would like to add something to that. In the Netherlands, we have a super congested grid network, and there are still way too few people who have their own decentralized energy system. Whereas, how easy would it be for the Dutch to put some solar panels on their roof? And that's also one of the reasons why I am invested in Greenlight Planet, because I think it proves how relatively easy it is to have a decentralized energy system going in areas where, unfortunately in the Netherlands, we will get to areas that will no longer be connected to the grid. We have many companies that will not get access to the grid, that will not be able to build out their commercial business just simply because they cannot get a connection to the grid. And I think we all, from a commercial perspective also, business-wise, need to become more aware that there are decentralized solutions, and that's what we should be working on. So I think that's also one of the roles we have to play as investors to show to the public that there are solutions possible. And yeah.
Thank you. Well, I think it's a very good closing remarks that we have here, going into the winter in Europe, as you know, which may bring its challenges. So well, thank you very much to everyone. I hope you enjoyed on streaming and in presence the session. Thanks to Krishna and Rosemarin for the very interesting presentation. And there's a break now, I think, of half an hour with the next session starting at 4 p.m. You can see the schedule on your app and on the screens outside. Thank you very much. Bye.